Welcome back. Nigeria's Minister of Finance says the country will continue to engage with international investors as it explores fundraising options after a non-deal roadshow in London earlier this week. The one-day event, which took place on Tuesday, was attended by 65 representatives of European and global fund managers. The roadshow was aimed at updating existing bondholders on the government's economic strategy. Mr. Adeosun was joined by officials from the Debt Management Office and the Central Bank of Nigeria. And details of Nigeria's flexible currency model will be ready in the short while, and that's according to the Managing Director and Chief Executive Officer of United Bank for Africa, Mr. Phillips Oduoza. Mr. Oduoza, who spoke after chief executives of Nigerian banks met with central bank officials, said the central bank had received lots of input from stakeholders, which was being studied with a view to creating a robust, flexible exchange rate model. The central bank last month announced plans to abandon the Naira's 15-month peg to the dollar, which has overvalued the Nigerian currency, harmed investments, and caused the economy to contract. The delay in clarifying how the new policy would further spoke foreign investors long worried about getting caught in the middle of a currency devaluation. Let's get the perspective of what foreign investors are thinking right now. I'm being joined by the chief economist at Exotics Partners London, Alan Cameron. Good afternoon, Alan. Thank you for joining us.
Good afternoon.
Well, Alan, as an economist who has been following the trend in Nigeria, what came to your mind when the CBN first announced it will adopt a flexible exchange rate policy?
Well, we've actually been hearing about these things for quite some time. There were similar promises made in the budget, and in the two MPC statements leading up to the most recent one, they had been saying that there were plans taking place to introduce a new foreign exchange system. So I think the response of the investment community was, we've heard about this before, we're not going to hold our breath until we see some concrete details about these changes. And I think that's still very much where people are, just in a watching and waiting kind of mood.
Now, after the banks met yesterday with the central bank, it was announced that the flexible FX model will be ready in a short while. What do you think foreign investors are expecting to see in this new FX policy?
Well, really the key is liquidity more than the rate. I think the rate is important in that you need to get to somewhere that the market finds credible, and that you think, where the market thinks that the central bank will be able to manage volatility and possibly, defend the currency in the event of a further downturn. But the main thing is just liquidity, and I think the interbank market has been administratively shut down, so we'll be looking for signs that has been opened up again, whatever mechanism they choose to do that. Based on what we've heard about the negotiations taking place, I think there's still some reluctance by the central bank to accept a system that allows fuller flexibility, and proper two-way quoting. So we'll have to see what they eventually decide. But I think there needs to be some greater degree of volatility than there is right now, in addition to an adjustment of the rate. And I think, pretty critically, we're going to be looking for signs that the main administrative controls have been removed. So right now, this 2 Naira per dollar rule, I think is, a big constraint on liquidity in the market. And to the extent that that could be relaxed or removed, that would be a very positive thing.
Now, the CBN at its last MPC meeting also announced that another window that will be restricted to certain items will be created, will be opened. From a foreign investor point of view, do you buy that idea?
I think it's not ideal, but I think they would be willing to live with it. The main thing is just to introduce some clarity around what those critical transactions would be. The basic assumption is that they would include, critical food, medical supplies, that would be the rate used for government payments, et cetera. And portfolio investors would expect to be moved to a lower rate, in a market controlled by the banks where there's more liquidity, and that would be fine. But I think if you're going to adopt, multiple exchange rates, that I think it's extremely critical to communicate to the market in a clear way which transactions are meant for which segments of the market. As long as that's done, I think foreign investors will be able to live with it. And then over time, as conditions stabilize, you might hope to unify it all into a single market. But that would take place over a matter of months or years.
Now, from a fundamental perspective, what do you think should be the fair value for the naira?
I mean, there are economic ways of coming up with the fundamentals, and those will point you in slightly different directions. They'll all tell you that some degree of weakness is required. But I think a very important component is also psychological, and it's just fair value is where the market thinks it is. At what level are you going to restore credibility in such a way that the investment flows will return and your reserves position is stabilized? If I had to make again, it's a fairly subjective assessment, but if I had to make that assessment, I would say it's somewhere between 280 and 290 to the dollar. But saying that, I think the economic models that are used to come up with such predictions are subject to a high degree of uncertainty, and ultimately, it's as much about economic fundamentals as it is about market psychology. And on the later point, I think that what the market would find credible is, once again, something in the 280 to 290 range. If they tried to do something that was less than that, I think that the market would be disappointed, and the situation they would find themselves in is that they had made a move, yet there was still downward pressure.
280 to 290, that's the band. Are you looking at the CBN's rate, the interbank rate, and of course the rate at the parallel markets?
Well, I think that would be a target for the interbank rate. They may choose to move the CBN, the official rate, to somewhere between what we have right now, 197 and 280. They may well just leave it at 197 and allow a greater degree of flexibility such that the interbank rate could then quote all the way down to 280. I think that's still, as far as I understand, that's still being discussed, and there's no final decision reached on how exactly they're going to do it. But ultimately, I think a good setup would be one where you allow banks to participate in a market where the majority of the liquidity exists, and I think the rate in that market would need to be somewhere, approaching 280. Thereafter, I think that would take a lot of pressure off of the parallel market, and I would actually expect to see a strengthening of the parallel market if more liquidity were allowed to return to a market in which the banks were more active.
All right, thank you very much for your time, Alan.
Thank you.
Alan Cameron, Chief Economist at Exotics Partners, London. The Mozambique President Filipe Nyusi has fired his Finance Minister Abdullah Malien, who has been embroiled in more than 2 weeks of negotiations with Russia's VTB Bank over a late $178 million loan repayment. A statement from Nyusi's office gave no reason for the dismissal and did not say who would be replacing Malien. Mozambique Asset Management borrowed $535 million from VTB to build shipyards in the capital Maputo and the northern town of Pemba in expectation of a rapid takeoff in the offshore gas sector, but missed a May 23 deadline for its first loan repayment.